Hi everyone, August Biniaz here with CPI Capital. I'm joined by 𝗖𝗍𝗶 Benesocky. Welcome, Eva.
Thank you, August.
We host the CPI Academy YouTube show dedicated to adding value to our viewers' investment journey. We bring on experts and discuss all topics related to real estate investing. Please subscribe and like the video because it gets us more exposure and we can continue doing hard work and getting you guys great videos. So we hope you enjoy it.
Yes, hope you enjoy. And we have a great guest on today. Thank you so much, August. But today we have John Fortes. So welcome, John.
Welcome, John.
Hey, thank you for having me, August and Eva. And everyone listening, please, please, please rate, review the show, subscribe, whatever platform you're on, please do it. Great show, great people.
Really appreciate it. And John has a great podcast that's how we learned about John. So we'll definitely promote that, and we'd love for our viewers to give John's podcast a listen as well. But yeah, let's get this show going.
Let's get this show started, John. If you want to,
let's go.
Right on, right on. If you could please start off by telling our viewers a little bit about your background and your involvement in real estate investments, please.
Sure. Again, thank you for having me. I started in 2018. And what really happened was it was a pain point that I had in regards to cash flow. So I was reading a bunch of books as far as like invest in stocks. And now I have a better understanding because of the fundamentals of real estate, of stocks. I just couldn't comprehend it at that time, but seeing the value in my personal home, the way we force appreciated things by doing simple, projects around the home, and then you go get an appraisal, and then all of a sudden you can refinance tax-free. I saw that as a way forward for me. But the pain point, what it was, is I became a basketball referee. And when you're a basketball referee, you need your time, you need availability. You need to be able to accept games that are at, a 5 o'clock time, but be there within an hour and a half before a game starts. How do you do that if you have a full W-2 that is a demanding, 9 to 5 work hours? So I had a pain point that I needed to solve. And real estate was the, the vehicle that was going to be that vehicle for me to get from A to B to create cash flow. So I'm still working on that. And, it started off with a single family home. And then we jumped into a 62. We have pretty much 2 weeks away from recording this, this episode right here. That since we sold that asset, we've held it for 3 years. And that's the one that, excuse me, when you talk about learning on the fly, that is exactly what that did. I'm talking about no distributions for the last 3 years, 4 capital calls. And this was a JV. This is something that we wouldn't put in front of investors. It just helped me refine my criteria. And I like singles and doubles. That was pretty much a triple. I like singles and doubles. If we're talking baseball, singles and doubles, let me hit for average and home runs will come. So I just wanted to put that out there because, not everything's hunky-dory. We're going to do the best deal. Things happen, but that's the one that allowed me to learn to know when I recognize this in the future, I know what to do. So when I got my capital back from that, I'm excited to go and deploy it in another deal because of what I learned. And thankfully I didn't lose anything, but it's just been an exciting, because I didn't lose anything, experience, right? But with that said, we took down in that meantime, we took down a 41 unit, which we first syndicated. And then 15 months later, we exited with the 1.5 multiple to our investors. And a lot of people said, why would you, what people were questioning, why would we sell? And, 1 year's holding. One, the buyer came to us and, solicited us and gave us an offer. Pretty much we said, okay, we like that. But after a year, we'd want to sell because we didn't want to hit our investors with short-time capital gains, excuse me. So with that said, we waited 15 months. They said yes to this price and it was a done deal. But we consulted with others that done it for a while because that was our first time exiting. What does that look like? It's a roll-up process. The same way you start a business and get everything underneath the umbrella, you got to start from the bottom and make sure all those bills are paid before you close out that LLC. So that roll-up process started happening. And that's when we got to see that. And then what the real big question is, I already asked it, why sell in year, 1 after year 1, as opposed to year 5 with the business plan. So the school of thought is, if you're going to make half of your investors' returns in 1 year, why spend the other 4 years getting the other half? Get them out the deal and proof the concept. It's a win for everybody. And that was the school of thought on that one. So we like that idea, and we know we was going to do plenty more in the future, and we want to just build that trust with our investors. Yeah. So, that's enough to chew on right there. I don't want to keep talking, but we've done a few more.
Yeah. And to always give your investors 50% in 1 year of returns, that's always an incredible kind of process. Also, another item to add is investors, they look upon and they entrust the general partner, the sponsor, the syndicator to make the best decision for the investor. So that was your decision and your team's decision to make at the time, and you believe it was the best decision for you and your investors, and all the power to you for that project. And also taking a step back on earlier what you said about a project that was very difficult. You went through the trenches that exist, and that's great. I mean, I think I was listening to this unrelated, but listening to I think it was Dave Chappelle, and a famous comedian. I'm sure most people know who Dave Chappelle is, but he's like the best.
Who was that?
Like the best experience I had was when I got booed off stage. That was the best thing that ever built me, because the worst already happened. I was embarrassed. I was literally booed off stage, so I could just go there and just be myself. In your case, I mean, it doesn't really relate so much in real estate, commercial real estate, but again, you went through the trenches. You were talking about capital calls, talking about the prolonged kind of terms. That's what you went through, and it built you as an investor, as an active investor, as an operator. So it's great you got that out of your way right at the beginning of your career. So again, all the power to you.
Yeah.
No, I mean, it's great because we're all new on that first deal, but the first deal was everybody that was in the deal. It was their money in the deal. That was their risk. That was our risk. We JV'd it. The difference between a joint venture partnership is us three can take down a deal together and operate and manage it. But then there's the syndication where we'll be the general partners and everybody else that's investing in the deal is the limited partner. So I just want to clear that up as well.
Got it. So that first deal that you did have some difficulties was a JV. And in JV also, you have a bunch of active partners, and at times you have minds clashing, and a decision is not really made. The decisions are not in the hand of one group or one person. It's multiple kind of leaders, and when you got too many chefs in the kitchen, the food is either going to be too salty or not salty enough. So
yeah, absolutely. A great tip is appoint someone who's probably boots on the ground, who's seeing it every day, to make the decisions on behalf of the group that you trust in the group. Now, we had someone like that in the deal, and they were phenomenal. They were really trustworthy. They were really communicative. They never disappeared or ghosted us. But at the end of the day, he made a lot of decisions and came back and told us, and we're like, yeah, we would have did the same thing. So that's where, you got to kind of understand that. Yes, you'll make decisions on the monthly calls together when it's a bigger item, but then when it's little things, let that person go and, make the call, because it needs real-time decision-making at that time.
Great. Awesome.
Now, John, maybe you can go ahead and tell us about the 𝗖𝗽, if I'm pronouncing that right, company, and maybe you can tell us how you help investors and expand on what your business model is today.
Yeah, absolutely. So I went running one day and I said, I had a couple colleagues in the industry saying, just start a podcast. I didn't want to start a podcast just talking about experience of real estate. I wanted to talk about how do you actually grow your business, right? So with that thought in mind, I was 3 miles out and I came with the aha moment. I'm going to talk about the passive investing experience of when you're investing with that company through the business and what to expect, right? So I was 3 miles out, and I was so excited to get home because I wanted to write it all down because I didn't want to lose the thought. So I kept playing with the idea in my head. How would I formulate questions? And it took me about a good 6 months till I got, maybe even 8, till I got the questions that I really like now that I have on the podcast. And that's, when I'm talking to people like you guys, right? And talking about, PCI, how are you guys doing? I mean, CPI.
Yes.
How are you guys onboarding investors? How are you guys communicating with investors? What are you using for outreach? What is your a
CRM.
CRM? Thank you. Yes. What is your CRM? How are you, like, what does your monthly newsletter look like? Are you even sending reports out to investors? What does that process look like for you? Because investors don't know what they don't know, and there's no platform out there that's sharing that experience. So I wanted to really detail, like, when you're coming in, when you come across the website, I like Ava, I like August, I want to invest with them. Go to their website, fill out a form, set up the call, we talk. Guess what? Boom. Now we can talk about deals. Because on that first call, depending on how you're raising money, you can't talk about deals, future deals, or anything you have under contract at that time. So you have to build that relationship. And I wanted to paint that picture and just be the Van Gogh of that space in the podcast game, because no one was doing it. And I felt like that was an opportunity, because one, I was selfish and I want to build my business. So that's how I built the Fortes company.
I love it.
Fantastic.
I love it. No, it's incredible. Now is the Fortes company, obviously kind of in conjunction with your podcast. That's kind of your thought leadership platform. But the company itself, it is an active company which it acquires real estate, or how have you structured that?
Yeah, absolutely. So the Fortes company part, like, basically we structure funds going forward now, because in the past, the thing I experienced in the past was when I was raising capital, and then all of a sudden, the investors are going to someone else's investor portal after they are already on my portal. I felt like, how can I build a sustainable business where I am the lead communicator for them, but at the end of the day, how do I make sure I'm growing my investor database and not someone else's? So I thought the best path forward is, yes, the Fortes company now creates funds, and we go ahead and partner with other investors in syndications or joint ventures. But we bring capital through the use of our fund, and every investor that invests in that fund, if we have 3 to 5 deals in that fund, you are part of every single one of those deals, whether you came in first or last. So that's how we raise money on those on funds going forward, because we feel like we want to incubate our investors instead of growing someone else's investor database.
Of course, that's great. And by having a fund and multiple projects within that fund, the investors diversify their investments. So that's a hedge against kind of risk. So that's great. No, that's awesome.
Yeah, absolutely. It provides a lot of impact towards investors. In 2020, right before COVID hit, I was in the middle of exploring this idea. So I reached out to my database of 600 people, and I said, look, what is the biggest pain point you guys have when it comes to finding a deal or seeking an investment? They said, one, it was diversification. They didn't have enough time to sit down deal by deal. I use this concept of someone has 500,000 and they're going to invest 100,000, in 5 different deals. That's a lot of time. That's a lot of nights that you're sifting through deals. So now you can take, let's just say you take 300,000 and put it in a fund, knowing it's going to be diversified. Now you have fewer deals to look at to go and deploy that rest of that 200,000. So it's just, diversification. They were looking for that. They were trying to save some time, and I was trying to solve that problem.
Yeah, you built your company on your database's feedback, and that's an incredible way of going forward. So
now,
awesome.
John, yeah, and I was going to say, John, how do you nurture your? What's the process that you nurture your investors?
That's a great question, because what I'm doing is I'm learning from a lot of people. So for instance, when you get approved to the investor portal, we had a call, and then you get the email saying, hey, go and sign up on the investor portal. You got access. I send them a template of why the purpose of the investor portal. It's for them. It's for their security. It's for their tracking. Gone are the days of the spreadsheets. If you don't have an investor portal, that's something that every company needs to have to legitimize themselves, right? And when they log into that investor portal, the first thing they see is a video message from me talking about the investor portal as well, why it's really helpful, kind of kind of captures exactly the little pamphlet that I just said that I sent out as well, the memo. But yeah, that's one of the things that I do for onboarding investors. That's so when I'm nurturing them too. So for instance, say someone comes on the blog side and I'm trying to get them to sign up, to invest with me. Obviously, they're here for a reason, right? Our avatar is talking to investors. So if you're listening to the podcast, you found me somehow, some way. So your intentions are to invest eventually. So when you're on the blog and you're getting I'm moving my blog from dual monthly to I'm moving it to weekly now. I'm in the process of that transition and putting together the different structures of what I want to send. So one time of the month, I'll tell you what the podcasts were that recently released. Another time in the month, I'm talking about an article that I'm sharing with investors that I think is very important to the industry. Another weekly email is a blog article that I've written, or even a blog article that I've captured one of my podcast episodes in, and then, link it back to the episode. And then another one is, that's what I'm trying to figure out right now. So that third one is what I'm trying to, that fourth one is what I'm trying to figure out, because I got 3 right now and I'm bi-monthly right now, but I'm trying to move it to 4 times a month, 1 each week.
And
always bringing value.
Always value,
yeah,
absolutely.
Value
Absolutely. Another thing too is one thing that I used to do is I early in days, it was funny because I was including a lot of stuff. And I found out that the shorter you keep it, the better, because I was giving so many tools, and it was all free tools and everything. And I felt like it was too much, because if I opened it and I would have been like, in my head at the time, I'm like, this is everything everybody needs to know. But then when I peeled it back a little bit, it's, give them that nugget, that gem, and know what to expect each week. All right, this is what the podcast is, what I got to go and recap on or catch up on. All right, the blog article. All right, cool. This is what we're talking about. And then here, maybe that fourth one, I think you guys just helped me figure it out. It might be a resource. It might be another resource that's going to help investors. So I think you guys just did it.
And believe us, this is a process that most kind of starting companies go through. It's a process that most kind of fund managers go through to find the best way to, cultivate a relationship with investors. If it's through our thought leadership platform, if it's through, referrals and other kind of networking events. But then when those contacts come in, when the relationship has been cultivated, how do you nurture that relationship? So eventually, when you have a deal, the person feels comfortable enough to invest their hard-earned money with you. So this is something we all go through, and I'm sure you're doing an incredible job with it.
Absolutely. One more thing on that is, on every newsletter, because I said keep it short, always have the call of action for your investors to be able to transition into the next phase of investing. So that's an important piece. So I want to add that.
Learned that too.
We've learned that as well. Another thing that you mentioned, and I like that you keep saying keep it short.
Yes.
When we're so excited to share all this information with investors, but it's too much information, they shut down right away anyways.
Great
so
point.
keeping it nice and short is where they can actually latch on and understand the process kind of minute by minute. And that's why they continue to follow you and continue to want to learn more. So
well, just to keep on the same topic, there's actually 2 lists that you're trying to nurture. So the first list is converting them to actual investors where you can actually talk about deals. And then the second list is, what are you going to do with that? Just show them deal by deal, right? How often are you going to have a deal? If you have a deal every month, great. That's awesome. You don't need to worry about producing anything else. But if you don't, company updates really help on that side. Project updates that you've done, or for instance, only time you should do grand announcements. I don't like doing grand announcements publicly on social media. One, I feel like that's skirting SEC laws if you're raising 506B offerings. I don't practice that. I might have did it once ever, but I don't practice it anymore because there's a fine line. And I'm trying to stay out of orange clothes, so I want to stay out of jail, and I want to do it right. But I don't feel like that on social media. If I'm going to be broadcasting or promoting a bunch of educational things. I don't think, a one time or every few months a celebration of closing fits that agenda. So I like to keep things in certain spaces. So if you're in my space, you're gonna see exactly what I'm doing if you're behind my walls, and then everybody else will just follow suit, right? So that's what I'm hoping happens in the industry. But there's gonna be two lists you gotta nurture, and how do you figure out that nurture? Maybe it's a once a month, because it's your investors now. Once a month, company letter. You know what I mean? So that's something to think about.
Yeah,
Perfecting it.
We've had this. Yeah, me and Ava and I have had this conversation a few times where I'm like, this is an incredible deal. Nobody can say no to it. And Ava's, listen, most times people invest with the person, with the fund manager, with the team.
Like, and trust, right?
The deal is secondary. So we got to still build that relationship with these investors we're trying to reach out to. So
showing that you're an expert.
For sure. And just to add to another item as far as compliance goes, now imagine us, which we're in Canada, we got to comply by provincial compliance regulation. Every province here, our version of state has their own security commissions, and then we got to also comply by US side, so it makes things much
double
more,
the whammy.
makes things much more difficult.
For sure. Now, another thing that I believe you also mentor investors, so maybe you can tell us about the process of how someone could get in touch with you, and what does that mentor-mentee relationship look like?
Yeah, thanks for bringing that up. It's a passion of mine where, like I said, selfishly creating the podcast for two reasons. One was for my kids to have a voice of dad if something was to ever happen to me, right? Because I travel a lot. And then the second thing is really, really being curious about what are you doing that I'm not, that's working for you, right? And we're sharing it through the podcast. And with that said, it translates into the experience of the passive investor, right? So when I'm bringing on capital raises and sponsors, and we're talking about that aspect of the business, I'm really creating a ecosystem of how do I perfect the business going forward. So when I'm consulting with firms, we're talking about how to nurture the investors. We're talking about how to create a fund, because the fund is going to be the best way that you can create like sustainable business, because of you have your own fund that has your own fees, and now you don't have to rely on raising capital for someone and only getting an acquisition fee, nurturing them for 5 years, updating them with the business, showing nothing for it, right? Because you're not getting any asset management fees as a capital raiser. That's just the nature of the game. Only the lead sponsors are. So as a boutique firm, what are you going to do? You're only going to get the acquisition fee and the exit disposition fee. That's it. So what do you do in the meantime? Create a fund, have your own fees. Now you can capture everything within your fund and not have to worry about raising capital for someone else, because one, you've already done it legally correctly because you've gotten your own documents together, and now you can invest it and be a co-GP in someone else's deal. Or you can go in JV with someone else, and you got to have terms and situations and set your guidelines. But that's what I'm mentoring people on: how to create a fund, how to create a sustainable business, what does your onboarding process look like, and how to nurture your investors.
Great. And we'll share your contact so people can get in touch with you who are watching this YouTube show. And yeah, maybe we can talk about your podcast a bit more. Tell us about any interesting.
The Passive Investor.
Yeah, the Passive Investor show, it's exactly what I just said. It's just painting the narrative for the investor. What to expect when I'm investing with CPI Capital? What am I going to see when I go to your website? What am I going to experience when I become an investor? How's the communication going to be? How often can I access you? And am I going to be, I shouldn't say this, because you're eventually the goal is to scale and hire underneath you. But if, as a small boutique firm, people still have access to you, right? People still can call you and text you. And all my investors, after I get off the phone, before I get off the phone with them, I said, this is my number. You can call me, you can text me, or you have my email. You can email me anytime and I'll get back to you. And that's what it is. That's what it's about. It's about doing doing deals with people you enjoy, investing with people you really like, and building that trust. So, whenever I do go to another location, I know this is completely off the topic, but the podcast has afforded me an opportunity to meet people around the state that now when I go and visit, I'm going to Virginia and then I'm going to Tampa. Before I leave there, I'm going to be meeting with investors for an hour before I get on a flight home. So, I mean, that's what the podcast allows you to do. You get to meet great people and chop it up with them. So,
Yes.
yeah.
That's
Yeah, and
fantastic.
when people hear you speaking, they kind of see your heart and soul, right? And I can see it right through you. We deal with people for so many people in my past business as a contractor, dealing with so many trades and suppliers and clients. So just speaking to you for a few minutes, you're really down to earth guy, really personable. So it's somebody that this kind of investing it's not, we're not selling a service or a product. We're selling a partnership. And the term of these things could be, sometimes 5 years or even longer in some cases. So it's important the person you're partnering with, essentially, someone you actually enjoy, someone you trust. So just wanted to kind of go over that. Now, talking about team building and talking about kind of allocating tasks. Obviously, you have your podcast, you have your business, you have your family. How do you divide your time? How do you kind of do you use any task management software? Where does your time is actually spent, and kind of talk to us about systems you put in place possibly for that?
How do I divide my time? Carefully. So with family, I'm trying to be as present as often. Especially when I know I gotta leave on a trip. That I really get sad before I do that. So
is that work related or is that basketball? Is that kind of?
That one's that. So if it's basketball, it's always work related. I consider basketball work related, but it's fun work for me. And real estate's fun work for me as well. So those two trips are basketball related. It's educational camps. So similar to how we go to conferences.
Yes.
That's basically, I'm going to learn how to become a better official. So I always try to practice a couple teaching camps and get better. And just like going to multifamily conferences, I try to, make sure I'm learning what's the next best thing out there. What's the, what type of things we need to look for in the future. So I feel like I owe it to investors. But dividing my time, I use Trello to kind of manage exactly what I have in the pipeline for projects. I kind of lack on that sometimes, but it's about having the process or doing the process, right? And knowing exactly where you are in that workflow. I actually use HubSpot as my CRM because I chose that because I know it's a little pricey, but I like the automated aspect of social media. I feel like if I'm on social media, I get sucked down a rabbit hole. And now when I get sucked down a rabbit hole, it's pulling me away from time from friends or family or whatever it is, or business. And I feel I owe it to people around me that I need to be a little bit more present. So I have no alerts on social media for my phone. And I go in probably once a day, if that by now, or definitely a couple times a week. And I answer anything that I need to answer. That's pretty much it. I use Zoom just to have interpersonal calls with investors, or obviously the phone. But as far as managing stuff, Trello really helps me when I have a big project and I get to move it down the board the way I design it. So it's like 25% or start 25, 50, 75, 100 complete, or in the upkeep section where I constantly got to go back to it and maybe change something.
Yes.
So another thing too is a podcast editor. I'm actually in the process of looking for one. I'm actually trying to find interns. One thing I don't want to do is create a box and say, hey, this is what I want it done. I want someone young and refreshing and whatever they're doing or coming out of school and with their own creative ideas saying, here's what you got to work with, go do your magic. And they can formulate it any way they want. And I want the show to be different any way they want. So I kind of have that idea because it's kind of fresh and unique and not the same. And, so I tinker with things. I like to, kind of shape things differently than what the standard is, because I don't want it to be viewed as, just a normal TV show. I just want it to be viewed as it's going to be something different. What did they do this time? So,
Nice.
and then you're going to learn from it. But yeah, I'm always trying to outsource things, and that's what I'm in the middle of right now. So that's a perfect question because I'm still exploring that.
Awesome. That's
fantastic.
great. Here's another item. I'll just kind of jump in here and make a suggestion. Maybe you're already on this track, but since you are involved in that kind of basketball space and that fraternity, bringing on potentially professional basketball players into this space of multifamily investing is also a great concept. Now, I was thinking about the same thing in boxing. I'm a big boxing aficionado, and I was thinking about bringing on a pro boxer who loves investing in real estate and having a conversation about how that has added value to their career and their life and what have you. So just a suggestion I throw out there, maybe in your future kind of goals.
Funny you ask, or state. One of my investors is a professional basketball player overseas.
Oh,
Okay,
really?
amazing.
There you
Awesome.
go.
Awesome. There you go. Okay, great.
I am a boxing fan as well. So,
There you go.
Andre Ward was my guy.
Oh, Andre Ward, right?
I
Okay.
can't believe he retired, and I'm still devastated.
Yes. They made the good movie that they made about.
Oh, really?
Yeah.
Nice. All right. This is going
okay.
to be a great one for John. This is a question we ask all of our guests that come on, and I'm looking forward to your answer. But what is your number one best advice to a passive investor or someone looking to passively invest in real estate?
Yeah. So the best thing I could ever tell someone is there's 5 things that happen with real estate when you invest in real estate, whether it's actively or passively. It happens, or residential or commercial, whatever it is. It's appreciation. Historically, it's about 6% a year. The asset cash flows, so the rent minus expenses, residual income, right? A loan pay down, tenants pay the monthly debt, the finance debt. Boom, done. Tax benefits, we already know about that. I'm not a CPA, but once you understand mortgage interest deductions and depreciation and other helpful offsetting items with real estate, you really get that benefit as well. So that's 4 right there. And the last one is my favorite. And my goal is to beat inflation 1% at a time. So it's the inflation hedge. Inflation, the same way it eats at your savings in the bank, eats away at an interest-only loan the same way. So what you're paying today on a mortgage is cheaper money in the future. So that's how inflation works, and I love that aspect of it. So whenever I try to, I'm not saying over leverage, but understand that, the longer you get, I love deals that can get longer interest-only rates or terms. So if it's some deals get 1, I'm okay with that. 1 is better than none. But also if it's 3 or 4, that's great too. So that's awesome. That's awesome. So those are the 5 benefits for passive investors, and it works for all types of real estate.
Great
Fantastic
advice.
advice.
Very analytical. Hey, John, we really appreciate you taking the time and coming on. We kind of, it was enjoying seeing your marketing material. Great show that you have. We prompt our viewers to check out your podcast and give it a listen like we do. We're going to share the link to it below this video. Again, thank you.
Thank you so much.
Hey, I want to say thank you because you guys were like really, really, really like constantly out there and doing your thing. And when I saw the message come from, both of you guys, I was like, I got to get on this show. I want to support what they're doing. And I really appreciate being a part of this. Thank you.
Thank you so much.
Awesome.